So, support and resistance is one of the most important, right, technical trading concepts that you'll learn. Okay? But here's the thing, right? Most traders, they get it wrong. Flat out wrong, right? They can't even draw their levels correctly. For example, this is a chart that I've seen, right? People, posting. And if you look at this, there's just way too many levels, right? Where do you want to buy? Where do you want to sell? Can you see that, if you have too many levels on your chart, it will clutter your mind. You will have analysis paralysis in your trading, and it's hard to make even a trading decision. So that's why in today's video, okay, I'll share with you 3 things. Number 1, how to draw support and resistance the correct way, right? Once you master this, right, you'll never look at support and resistance the same way again. And trust me, right, what you're about to learn, right, is what other trading courses would charge you thousands of dollars for. And I'm going to share it with you for free. Number 2, you'll learn, right, when, right, to trade off the reversal at support resistance. Meaning when you know the price will likely hold at support and resistance. That's number 2. And finally, number 3, you'll also know, right, when support and resistance is likely to break, so you don't get caught on the wrong side of the move, right? So you'll learn all this and more in today's video. But before we begin, right, hit the thumbs up button and subscribe to my YouTube channel so you never miss another trading video again. Have you done it? Then let's get started. So the first thing that I want to share with you is how to draw support resistance, right? This is very, very important, so pay attention. How I do it is that I use 3 simple steps, right, that I'm about to share with you. Number 1, you want to zoom out your charts, right? You want to see the big picture, right? Once you can see the big picture, it's much more obvious to your eyes, right, which are the key levels you should be paying attention to, right? If you're on TradingView, I'll share with you later how you can do it. Number 2, you want to draw the most obvious level. If the level sticks out, that level matters. If you're squinting your eyes trying to ask yourself, is that a level? Is that not? Then it's not a level. Ignore that. Okay? And number 3, you want to adjust your level to get the most number of touches. So let me explain these 3 steps. So over here, this is a typical TradingView chart. Let's get started, right? Just click reset chart. Everything is back to its default view. So how do you zoom out your charts? I like to typically zoom out, 5 to 10 times. So you can use, if your mouse has a scroll, right? You scroll it down about 10 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? There are some levels here. Let me just remove it. Okay, now we are starting from scratch. So that's the first thing, zoom out your charts. Second thing, draw the most obvious level. So that's what I'm going to do right now. So from the looks of this, I can see that this is a very obvious level. Okay. This over here is an obvious level. This one over here is an obvious level. This one, I can see this one here. This one over here, pretty obvious as well. Okay, this to me, right, from the looks of it, right now, these are the most obvious levels to my own naked eye. You can notice that I can do it pretty quickly, right? There's no need to ask yourself, second guess, right? Because if it's there, it's there. If it's not there, don't waste your time. So I've done the second part, draw the most obvious levels. And the third thing is to adjust your levels to get the most number of touches. What this means is that you want to shift your support resistance, right, where the price hits the level the most number of times. So for example, let's look at this. So for this one over here, I could actually draw it at the absolute highs. But I don't want to, because remember, I said that I want it to touch the most number of levels. So actually, if I were to shift it down lower, somewhere here, notice I can get a few number of touches, right? This one pretty much exceed by quite a bit. So you have 1, 2, and 3. If I want to, I can actually draw another level over here. Okay? So now you can see that your support resistance look somewhat like an area at this point over here. Okay, let's continue. I want to adjust this one. So if this one again, I can just adjust it slightly lower. And I get more touches, right? Over here. One touch, 2, 3, 4. And this one, exceeds by quite a bit. I can draw another level if I wish to. But I want to keep my charts clean. So I'm just going to use one level. This one over here, right? If I just adjust it, right? Slightly higher. Okay, notice that here I can 1 touch, 2 touch, 3, 4, 5, 6, 7, 8, 9. Quite a number of touches, right? So you can see that this is how I adjust it, right? To let the price touch it the most number of times. Same for this, right? I don't want it to be drawn my level over here at the extreme low. I want to get as many touches as possible to get the price action involved, right? at the level I'm drawing. So if I'm going to shift it up slightly higher, you can see that I got one over here, right? Looking back, 1, 2, 3, 4, 5, and then 6. Plus this one just broke down, okay? Again, same thing for this one. Adjust it to get the most number of touches. I'll draw it something like this, or I can just look to the left, alright? See, 1 touch, 2, 3. This one didn't really touch a bit. If I'm going to shift it up higher, I might miss this one out. So what I'm going to do is that I'm going to, take into consideration the recent price action. It has more weightage. So I want to give in to this recent price action first to get this touch over here. Okay, and we have a few more touches behind. Same for this one over here, right? I don't want to draw at the extreme low. I push it up slightly higher. Get this touch involved, right? This one as well. This one has a false breakdown, but I'll just, leave it there. And you look back, you almost got this one as well. So I just shift it up slightly higher as well. So from the looks of it, you can see that right now, the levels on my chart, right, they're much cleaner. And now, one look at it, you know which are the key levels that you want to pay attention to and that you want to trade from. So this for first example, all right? Let's go to another one. How about pound dollar? Okay, have a look. Same concept, right? Let's just reset this once again and do the 3-step I just mentioned. First step, zoom out your charts. So I'll zoom out just 10 times to keep it consistent, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right now, you're looking at the big picture. Step number 2, draw the most obvious levels, right? Let's do it here. This is obvious to me. This is obvious. This is pretty obvious. This one here. This one here. And perhaps this one here. Okay, so now let's do the adjustment. I've already drawn out the most obvious levels. Notice that I didn't spend time, wondering, is this a level? Is this not a level? None of that. So now time to adjust. So this one over here, I noticed there's this level. If I just look to the left, okay, I can actually adjust it a little bit higher. Okay, getting involved with this touch and this one behind. Okay, fair enough. This one, I'll adjust it, right, slightly lower, taking into account this level, this, and this, and even sometime this one over here in the past. For this one here, I could adjust it slightly higher. Okay, perhaps something here, like this, got this level, this small one, this involved, and also towards the left where I missed this one by a bit, but it's pretty close by as well. Okay, for this level, I'll adjust it. Let's see. You want to get the most number of touches. So I'll shift it down. I would say this one over here would be a better one, right? This one I got 1 touch, 2, this one 3, 4, this one here as well, 5 and 6. You notice that I didn't put it at this most recent low over here, because if I were to do this, right, it's going to negate a lot of touches at the back over here where all this one's where the price just sliced through the level. So I want to adjust it where the price get the most number of touches. So in this case, I actually did sacrifice the most recent high. So shifting up here, right, would be a much better level to draw. Notice that it gets the price action more involved at this level. And finally, at this, not finally, this one over here, I would shift this up slightly higher. 1, 2, right, you can see over here, 3, 4, and a few more behind. And similarly for this one over here, I don't want to draw it at the extreme low. I'll try to get more touches involved. In fact, up here, I can get this one involved as well. 1, 2, 3, and 4. Okay, so that's pretty much right on how to draw your support resistance level. Do you want to do one more? Right, just one more, right? Just a quick one. Let's do dollar yen before we move on. Right, like I said, right, this is so important, right? Go and apply, draw the levels, and trust me, you'll see the markets in a different light. It's like taking the red pill and blue pill. You take the blue pill, right? That's it, right? You're out of the matrix. You see the markets in a different light. So dollar yen, right? Same concept, right? Zoom out already. Draw the most obvious levels. I'm going to draw this. This is obvious to me. This, and this. Okay, so you can see that I do it very quickly. I just draw the most obvious levels. If it's there, it's there. If it isn't, move on. So time for the adjustment. So this one, I'll shift it up slightly higher. Right, again, this one over here, get involved these 2 touches, and this one, just ignore this. Not really a touch, but a breakthrough. Then you have this one over here, right? I'm going to adjust this slightly lower. Okay, you can see you involve this level, this one over here, this one, and this one, right? Quite a number of touches. I've got this one as well. I'm going to adjust this slightly higher, so it involve more of the price action. You can see 1 level, 2, 1, 2, right, 3, then back over here as well. Over here, I'm going to adjust this possibly like this, okay? I can involve this area of the price action as well as this highs over here. And as for this one, I'll shift this one slightly up higher, involving this price action 1 touch, 2, and 3, and 4. If I go up slightly higher, this will be a little bit too much as I pretty much ignore the recent low. So I'm going to shift this down lower, getting the this lows involved as well. So that's how I would draw my levels for dollar yen. And there you have it, right? How to draw support and resistance. Okay? So with that said, let's move on, shall we? Now you've learned how to draw support resistance. The next question is, how do you tell, right, when the price will reverse at support resistance? How do you know, the level will hold? That's the question, right? So I'm going to share with you a few tips to bear in mind, right? Look at this. You want to see a power move into market structure. What this means is that if you have drawn your area of support or resistance, you want to see a strong move into the level. Big bodied candles, large bodied candles. That's what I mean by a power move. Very strong momentum move. Number 2, you want to see strong price rejection. This can be in the form of like a shooting star, where you see a long wick, price gets rejected. Let me just draw it for you, right? Let's say this is resistance, price comes in, bam, gets rejected, right? The stronger the rejection, the better. That's what you want to see. And the third thing is there's a few things. Number 1, like I've said, right? The larger the candles, the better. You want to see strong momentum move, power move. And another thing is that the longer the time that the price is away from the market structure or support resistance, the better. And the reason being is that, let me explain first, right, why you want to see large bodied candles into a level. So let's say, right, when you look at support resistance, right, when you have a strong move coming into a level, right, at this point, right, ask yourself, right, where will, let's say let's say you want to go short, okay, and there is definitely opposing pressure, buyers who want to come in and buy at good prices. Where is the good prices that buyers would come in? Well, if you look at this chart, chances are buyers might queue at this area of support, right? Because there is obvious market structure where they can wait for price to retest and go long. Okay. However, if another instance, let's say you didn't get a power move, you didn't get a clean move, instead you get a very choppy move like this. Like this, like this, like this, like this. Now ask yourself, if you're going short over here, where would the opposing pressure come in? Well, this time around, buyers could potentially be at this swing low, or even this swing low. What this means for you as a trader who is looking to short is that as the price comes down lower into these levels, you will face opposing pressure that could, turn the tide against you. So that's why you don't want to, short when there's this type of stair-stepping price action into your level. Because all these levels, right, these minor levels, swing low and swing low, is where opposing pressure could come in and, push the pressure against you, against your trade. Okay? Another reason why you want to see the large candles, right, the large strong momentum candles, or what I call a power move, is very simple, right? When the price comes in like this, a very strong move, right? Just a bold, strong move, right? Often, right, traders will just, look to buy the breakouts. All right, I'm sure you've probably, done it yourself, right? Strong momentum move. Oh, let's buy the breakouts. The market is, rallying, right? Let's buy. And then, where will you put your stop loss? Chances are, right, you put it, under the resistance, right? Maybe in the middle of the range, or even somewhere here, or even to be conservative, even below this area of support. So what this means is that if the breakout fails, right? If the breakout fails, right? It's going to hit, right, all this cluster of stop loss orders, right, over here, and over here. And if you think about this, what are this cluster of stop loss orders? They are simply, right, the orders to exit the market from the breakout traders who are long. So this means these are actually sell stop orders, right, which would induce further selling pressure. So the more bullish, right, the more you get a power move into market structure, the more breakout traders will hop on board and get on the move, right? The more the stronger the reversal will be, right, when it reverses back towards the downside, when it hits those sell stop orders, right? So this is why you want to see the larger the candles, the better, right, into market structure. Power move into market structure. Don't worry, I'll share with you an example later. And finally, right, the longer the time away, the better. Why is that? Simple, right? The longer that the price is away from a level, right, the more it would attract attention from the higher time frame traders. For example, if the price has not retest the daily, for example, $100, the $100 price level on the daily time frame for the last 6 months or 1 year, you can be sure that that level can also be seen on the weekly time frame or even the monthly time frame. And this would actually attract more traders, right, from the higher time frame to pay attention to the level, right? That's why you can get a stronger so-called price rejection or a reversal at that level when you know there's longer time away from the level. All right, I know I've covered a lot of theory here, so let's have a look at the examples, shall we? So let's see. Pound yen. Okay. So what do I mean by a power move into market structure? So if you look at this, let me just reset the chart. Okay. If you look at this, right, notice, right, you see over here, this is what I call a power move, right? Very strong momentum coming to a level, right? No doubt this one took a while for it to reverse, but eventually it did reverse towards the downside. You can see that strong power move into a level. This one is quite strong as well. Notice the candles all just bullish and one directional into resistance, power move, and then market reverse. Okay, let me share with you a few more examples. How about silver, XAG? Right, we are looking for power move down here. Okay, so if we look at silver, can it draw some levels here? You know what, let me just use this instead because my levels are already drawn here. So silver, okay, looking back, a power move into support. Okay, look at this. Strong power move, large body momentum, large strong bearish momentum into support. Then you got this price rejection over here, right? Long wick sticking out, right? And then you have this reversal up higher. Okay. This one again here, you have a strong power move, but there wasn't any price rejection or into any key market structure. But you can see that, you know, the price again, right, went up, reversed relatively quickly. And what else can I share? Let's see if I find another example. This one over here, right? Strong bearish momentum, a power move into this area of support. Okay, and then you have this relatively quick reversal towards the upside. So what you want to see is again, right, this type of price action structure, big, bold, momentum move. Let me share with you another example. This one is the 5-year treasury note. Okay, this one here, very obvious. Look at this. Can you spot it? This power move over here, strong bullish move into resistance. Trust me, right, traders, they are new, they're unaware, they buy the breakout, right? Oh man, the market is going to the moon, let's buy a breakout. And then the market, bam, it reversed the next candle, right? This candle, it did a strong reversal. They get caught on the wrong side. Then what happens? As the market hit lower, it's going to hit their stop loss, and the market, you know, pretty much have a pretty swift decline over here. So this is what I mean by a power move, right? This is a very good textbook example. Strong move up higher. You have this price rejection in the form of a dark cloud cover, right? And the market pretty much went down pretty swiftly. So with that said, right, let's have a look at example that you don't want to trade, soybean meal. Okay. So if you look at this, right, over here, this clearly, right, this area over here, it isn't a power move. I mean, you compare to what you've just seen, what I've just shared with you. Look at this move into this area of support. Do you want to trade this? I sure as hell wouldn't want to trade this, right? And the biggest reason why is that, let's say, right, you do get a valid price rejection or something like, you know, a hammer. Okay. You can go long, right? And shortly afterwards, as the price hit higher, this over here is where potential selling pressure would lie, which is going to, you know, push down the price lower as, you know, sellers look to short the market. And this is bad for you as a trader who is long right now. You're against the trend, plus, right, you don't have this power move into market structure, plus you have this swing high which is just, you know, nearby, right, which could actually, you know, turn the tide of your trade. So this is why, again, I emphasize a lot, look for a power move into market structure. That is really important. Okay, another example, I think this is quite a decent one, although this is counter trend. Strong power move into market structure and then this reversal. Notice the range of these candles, large, big, and bold. Okay, so hopefully, you know, you understand this one over here when you trade reversal at support and resistance. This over here is stuff that you probably, you know, will not find elsewhere. Okay, moving on. When do you trade breakout at support and resistance. So this is actually pretty much the opposite of what you just learned earlier. So you know that the price is likely to reverse at support resistance when you have a power move into market structure and a price rejection. So when you are looking at it from a breakout standpoint, you don't want to see a power move into market structure, okay? So what you want to look is possibly, you have higher lows into resistance, looking somewhat like an ascending triangle, or lower highs into support, somewhat like a descending triangle, or a build up, right, that is typically support by a moving average. So if all this is foreign to you, don't worry. Let me share with you a few examples. So let me just cover each one from the theory aspect. So higher lows into resistance is something like this, okay? Typically, you can see that the price looks somewhat like an ascending triangle. This is significant because it's telling you that the buyers, they're willing to buy at these higher prices, higher prices, higher prices, and higher prices. Lower highs into support is just the same thing. All right, telling you that the sellers are in control, willing to sell at these lower prices, and lower prices. And on top of it, right, you notice, right, that from this price action is telling you that the buyers are also getting weaker, because first time they pushed the price, it moved this much. The second time, it only moved this much, and the third time, right, it's even shorter over here. Same for this ascending triangle, okay? Sellers, first time, it pushed the price down by this much, then this much. By right, you should get lesser, and lesser, and even lesser over here. So you can see that the price action is actually quite interesting, right? Where one side is getting stronger and stronger, and the other one is getting weaker and weaker. Okay, and build up, right, supported by moving average. What this means is that aside from ascending and descending triangle, there's another variation, is what I call a build up, right? So sometimes the price could just come up into a key level and then just consolidate, right? And if you pull out a moving average like the 20 or 50 period moving average, you'll notice it'll come in and support it pretty nicely. It's like the market is really respecting the moving average and getting ready to break out, right? This supported by MA can be applied to higher lows and lower highs into support as well. I'll share that later, right? But these are the key concepts that I want to share with you that alert you, right, that the market is about to break out of either support or resistance. Okay, let's have a look at a few examples. So for this one over here, right, dollar against the Chinese yuan, pretty good example right now. So notice this over here. Right now you have this ascending triangle, right? Higher lows coming into market structure. You look at it, right? Buyers are willing to buy at this higher prices, higher prices, higher prices, higher prices, and higher prices. And if you look at the sellers, right, in terms of their strength, they're getting weaker. They're getting, feeble. First time they managed to push the price down by this much. Then this one got weaker. This one is just one candle reversal. This one is pretty strong, right? But generally you can see that the sellers, their strength, right, is getting weaker and weaker. Okay, so this is a sign of strength that the market could possibly break out higher, right? You don't want to be shorting at this resistance, right? Firstly, number one, you don't have a power move into resistance, the structure. And number two, right, if you were to go short into resistance, let's say, the market does reverse, somewhere over here, close, you're going short. Shortly afterwards, this level over here is where buyers could come in, right? Before the price could even move, right, you're going to face an opposing pressure that could, turn the tide against you. From a risk to reward standpoint, it doesn't even make sense as well. So this is why, right, I say, if you want to trade reversal, you better look for a power move into market structure and not this type of higher lows into it. Similarly, right, if you pull out your MA, I'm not sure if this one does. Yep, pretty decent, right? See your 50 MA. The price, right, somewhat being supported by this 50 MA over here. Okay, so this is one example over here for dollar against the Chinese yuan. Let me just share with you a few more before we conclude today's session. Dollar against the Indian rupee. So this one over here, right, we have what we call a typical build-up form at resistance. Just zoom out a little. Notice, right, this one is a little bit different from the ascending triangle, but the concept is the same. You have this build-up form at resistance telling you that buyers are willing to buy at these higher prices. They are willing to buy in front of resistance. And the MA part where I mentioned earlier is that in this case, right, if you look at it, notice the price. Okay, this isn't a perfect example, but you would see what I mean, right? Is that the price is somewhat being supported by the 20 MA already, right? So this tells you that the 20 MA is actually supporting up the price higher, getting ready to break out. Okay, let's have a look at another example. Dollar Canadian. You might be wondering, hey, Rainer, wow, you seems to be really good at, identifying all these cherry pick charts, right? Yeah, it's because I actually traded all of these setups. It's all in my head. That's why it's all very fresh. Dollar Canadian, okay. Okay, look at this, right? This is a very beautiful example of a build up. Okay, look at this. Price. Let's just use this level. Oh, this is my... Okay, no. Notice that there is this area of resistance here. You have this build up forming, and notice how nice the moving average supports the price higher. So when you see this price action, please, right, don't short the markets. This is a very... this is a signal that the market wants to break out higher. This is a sign of strength. Don't just blindly short. Oh, price is at resistance, right? Textbook says short. It's going to be painful, right? Trust me, don't do that. Now that you're more proficient in price action trading, you notice that there is a build-up form at this resistance. The moving average, the 20 MA, is supporting the price action. It tells you that the market is likely to break out higher. Okay, and in this case, obviously, it did break out. Cherry picked by me, traded by me. Right, another one is Euro Canadian. Okay, just one more last one before, so you kind of understand what I'm trying to say. Euro Canadian, right? So right now you can see that this price action. Okay, look at this series of lower highs coming to support. Let me ask you, do you want to be buying at this point? Do you want to buy into this area of support? I hope not, right? Because after what I've just said, right? After what I've just said, lower highs into support is usually a sign of weakness. If you ask me, the market is likely to break down lower. Can the market break out higher? Of course, right? It can, right? The market can do anything, but we're dealing with probabilities here, my friend. So from the looks of it, right, the market is showing sign of weakness, and there's a good chance it would break down lower. So if you look at the from a price action analysis, right, strength and weakness, right, notice the first time the buyers made a pretty strong move, pretty decent strong move. Then it got weaker, and it got weaker over here. Whereas the sellers, they're willing to sell at this lower prices, lower prices, lower prices, and lower prices. From the looks of it, right, the market, right, there's a good chance it will break down. So this is what I mean by, lower highs coming into support. Okay, so moving on, right, let's do a quick recap, right? We have covered a lot in today's video, and we just, talk about one concept, support and resistance. First thing first, how to draw support resistance, right? That's the first thing we've covered, right? Zoom out your charts, 5 to 10 times on TradingView. Draw the most obvious levels and adjust it, to get the most number of touches. Second thing, support resistance reversal, right? You want to look for a strong power move into market structure. Larger the larger the candles, right, the better it is, because as I explained earlier, right, a couple of reasons, right? You don't have opposing pressure that to push the trade against you. And also, breakout traders, right, when they cut their loss, right, it would actually result in a very swift reversal. So the stronger the price comes into a level, right, when the reversal comes, it could be just as swift towards the downside, right? If the price comes in a very choppy, stair-stepping price action into a level, right, you can expect the market price action, right, to go in the opposite direction in a very choppy, stair-stepping fashion as well. Also, the time away plays a part. The longer the price is away from a level for a long time, right, it would attract the attention of higher time frame traders, and it makes the level even more significant. And then we talk about breakouts. Higher lows into resistance is a sign of strength. Lower highs into support is a sign of weakness, and looking at build up as well at support resistance. And usually you can get the moving average, right, either the 20 or the 50, right, would tend to support the price into this key market structure. And it's a sign, right, telling you that the market is getting ready to break out, especially when the price and the moving average, they don't have much space to move, right? That is really, right, a signal, a strong signal that, better, get your eyes, get your mouse, get your fingers ready to trade the breakout. Okay, so with that said, right, that is what we have covered. If you want to learn more about price action trading, if you find that this video is really good, then trust me, right, you'll like this one over here, which is at my website, tradingwithrainer.com over here. Just scroll down and check out this guide, right, the ultimate guide to price action trading. Click this orange button, right, and I'll send this guide for free to your email address. You'll learn how to, better time your entries and exits. We'll go more in depth about price action trading and much more. And this guide is completely free. So with that said, right, wow, it's been a great time, right? I hope you've enjoyed this video, right? Hit the thumbs up button, subscribe to my YouTube channel, and any feedback or comment, let me know below, right? And I'll get back to you. So with that said, I wish you good luck and good trading. I'll talk to you soon.